Good morning and welcome everyone to the Moneycontrol live stream. You're watching the opening bell. I'm your host Nickey Mirchandani. Well, markets look set for a positive start tracking global and over. Trends in SGX Nifty indicate a positive opening coming in for the broader index in India. US markets jumped on Monday after Credit Suisse rescue deal to an extent bolstered confidence in the banking system. Asian stocks, they've lifted above or rebounded from that lows, but then the mood remains fragile at this point of time. There's a stress in the market over concerns around Fed rate hikes. The FOMC two-day policy meeting begins today. A lot of discussions around that would be closely watched for. Elon Musk has said that the Fed must cut rates by at least 50 basis points. That's quite a contra view coming in from the Maverick, right? FIIs, they have been selling shares for the next for 8 consecutive sessions now. Sold shares worth around 2,500 odd crore. In terms of the DIIs, they've been holding up. They've been buying shares, and for this time around, it's for 2,876 as of March 20. But with that, let us get going and discuss some stocks and strategies today with Nirav Chedda, the AVP, Derivatives and Technical Research from Nirmal Bang. Good morning, Nirav.
Good morning, Nickey. How are you?
Before you could start on with the discussion and let me know about how the Nifty is forming a base around 16,800 levels and the bounce back that we could expect thereon. How are you enjoying the weathers right now?
You don't know about the weather in Mumbai. 1 minute, you wake up, you feel very hot, and the next day, it's raining. and nights are chilly sometimes. So, it's very difficult to predict the weather here. The only thing good about the rain really is, with the pollution in Mumbai, I hope, that comes down, because last 3 months, the pollutions have been bad. Even the family, you see everyone, the corporate world or outside, they're falling ill because of pollution. That should decrease because of the rain.
I just hope the rain gods kind of bless us a little earlier than expected. But let's talk about Nifty and back to the markets. And, we've seen Nifty forming a base around that 16,800 level. Do you see a bounce back coming through from that one?
Yeah. So, see, again, if you look at the Nifty, chart, it's sort of playing with us. One day, 17,000 was broken and everyone turned negative, including me, actually. Because that was a very important support area. But on a closing basis, at least for the future, it has come up above that 17,000 level. Then on the spot is just below that 17,000 level. So I do believe, with the pullback that we witnessed yesterday, the views have to be changed, and from here there can be a good bounce coming in. Firstly, because the PCR is oversold. Secondly, a lot of put writing has happened at the 17,000 put strike, and I believe that is a very strong support area for Nifty at this point of time. So there should be a bounce that should come in at least up till that 200-day moving average, which is around that 17,400, 450 odd levels. So yeah, I do expect a bounce coming in for Nifty from current levels. Also, a lot of stocks have been sold. A lot of indicators are oversold. So all in all, that bounce should come in. Buy Nifty at current levels and on some dips, the stop loss for the same would be a little higher, a little far, 16,850 odd levels. But I believe that should not be broken now on a closing basis. So that should be the stop loss on the future. And you can expect 17,400, 450 to come in. If it does come in, that is where you book your profits. Similarly, in Bank Nifty, see 39,000 level was broken the last week, but this week that has been held. And that is a very strong support area for Bank Nifty. And this is where, I believe Bank Nifty should witness a bounce from. Both of these indices are, going in a downward sloping channel formation with the lower band hit for both. So, it is now time to hit the upper band, which is, significantly higher from the current levels. So, we are in for a good bounce, I think.
Sure, let's speak about Bank Nifty. There is an interesting data that has come in. Now, NSE has started segregating FII data and FNO between Nifty and Bank Nifty. And yesterday there was this interesting data which came in that showed that net selling of nearly 2,000 crore in index futures, almost 1,700 odd crore when it comes to the Nifty index, and only 300 crore in Bank Nifty index. What do you make out of it? Do you see that as a right now, do you think Bank Nifty remains in the buy mode as long as it holds on to that support level of 39,000 on a closing basis?
At the start of expiry, Bank Nifty was the index which was holding much more open interest or much more short positions vis-a-vis the Nifty. And that is why you see, that capitulation that happened in the last 2 weeks. A lot of banks came down. So, yeah, it was sold a lot much before the Nifty. And that is why you're seeing, not much aggressive selling coming in Bank Nifty at this point of time. But having said that, I believe you'll now see buy figures coming in with one good day in Nifty and Bank Nifty from the FIs. However, I do not track the FIs data much because there are so many participants and so much turnover is happening. So at this point of time, just looking at FIs doesn't feel right. Even the DIs, if you see, they have continued to buy, even the retail participants. So I think, yes, there will be a point where good buying will come in, a breakout will come in, and you will see a very good trend emerging. Until then, just play the upper band and the lower band. We are near the lower band, just buy near the lower band, sell at the upper band.
Sure, and three trading calls, that could be profitable bets for our viewers. If you can let us know about that and the immediate RSI levels for these calls.
Yeah. So, see, there are two stocks, both buys for today, because I believe Nifty should move up. The first one is BPCL. If you see, because of oil going down, it's very profitable for these companies, oil marketing companies. Having said that, that's the fundamental part. Technically, after a long time, this stock has witnessed a positive formation, a breakout above that 350 levels, which was very, very important. It has made a very good base in between 300 and 350. A long consolidation has gone in after that fall from 500 odd levels. So, that consolidation breakout is coming. I believe this stock is now headed higher towards that 400 odd levels, going forward. So, one can look to buy this stock with a stop loss of around 352. The target for BPCL can be around 380 to 400. I believe that that should come very fast. It has been the first one in the trio to give a breakout. So, play this one. The second stock is a buy call on Pidilite. Even this stock, after a long time, it has started to move up. Also, this stock has fallen from about 2850, 2900 odd levels, and a very good consolidation has gone in between 2340 and about 2240, 2250 odd levels. I believe a breakout has come in at 2350 levels for this stock, and even this stock has gone above the 50-day moving average,
Sure.
which was a resistance area all the time.
Sure.
So,
Nirav, quickly the third stock and just the RSI levels before we address the stocks and news ahead of the market open. The third stock along with the RSI levels. Just that.
Yeah, sorry, I couldn't get you. Just the third stock and the RSI levels.
Yeah.
Okay. Pidilite is the second stock, BPCL third stock, first stock, and I think, you can go ahead and buy Coal India at current levels. It's a good stock. RSI levels are around the 50 mark, even though they are falling. I think it's a good level to buy this stock from current level, looking at the overall OI positions.
All right, so BPCL, Coal India, and Pidilite are the three stocks that Nirav has recommended as the profitable bets out there. But we're going to quickly address in the top movers of the day. And bunch of stocks that we'll be addressing this morning will be something in the likes of OMCs, banking, Reliance Industries, Pheonix. There's a bunch out there. So HDFC Asset Management, I'm going to start on with that first. GQG partner has checked out. Now remember, GQG is the name that probably made its entry along with the Adani group of stocks. That's when it actually hogged the limelight. SBI mutual fund. So there is a mutual fund actually checking into the AMC quite literally. So SBI has checked into the company. It's been the buyer with the open market transaction. Pheonix Mills, that's an interesting report coming in from MOSL. It's initiated a coverage on this one and said that the mall portfolio is expected to increase by, in the next 4 years by FY 2027. And it said that the presence would expand to 6 out of the top 8 cities. In terms of the retail portfolio, they're saying that it's expected to report a 32% kind of CAGR growth when it comes to the rentals from a span of around FY23 to 25, and has also suggested that the company is also building offices on top of adjacent to its existing or upcoming malls. It expects the company, Pheonix Mills, to deliver 34% CAGR in EBITDA on rental portfolio. So that's where clearly the traction lies over the span of FY23 to 25. Another one that we have on our list is disclosure included. Of course, we're talking about Reliance Industries, the group company out there. The CLSA on Reliance Industries says that it's a bargain buy. Stock has fallen 20%. And it's just 5% above that conservative valuations. So do keep an eye out on this one as well. But we're going to be waiting in for the markets open just to see if we're looking at a positive opening for the markets. Yes, it is a positive opening coming in for Nifty 50 index out there. 17,000, about that mark, 17,050 mark, with gains of around 0.5% out there. So comfortably holding around that level, more than 17,000 mark. Also needs to be seen how Bank Nifty has been stacking up, because we're seeing FII's data. They're not much of a sellers when it comes to the Bank Nifty index, right? So 0.5% gains even on that one. Do remember that 39,000 mark has been holding up even on closing basis. And today in the opening deals, Bank Nifty level, we're looking at 39,500 mark. So clearly, we are seeing some momentum building in even on the Bank Nifty index overall. In terms of the broader index, we're looking at gains coming through 0.3% of mid cap. And in terms of the small cap, we're looking at gains to an extent of 0.5% even on the small cap. So we are looking at a positive opening just in tandem with the global markets. In terms of the sectoral indices that we have, Nifty IT, some amount of flattish momentum with positive bias out there. In terms of the Nifty Metal Index, 0.5% even on that one. Metal has been doing quite well in the last 2 days or 3 days for that matter, at least on the opening basis. In terms of pharma, the other defensive basket that we can look at, that's flat again, but with a negative bias. Remains to be seen if, there are a couple of developments happening even for the pharma space. Needs to be seen how does that stack up. In terms of auto, we're looking at gains coming in, 0.2% on Nifty Auto Index. And in terms of FMCG, like we lightly highlighted just before the defense pack, we are looking at negative bias coming in for that one, along with the flattish undertone. Nifty Realty Index, it's been an underperformance start from the year, right? But today, in today's session, we're seeing some amount of traction building in, 0.5% gains on Nifty Realty Index. Energy holding up with gains of around 0.5%. And also in terms of the other index that we have, specifically something like a PSU bank, that remains to be seen, because banking index has been holding up. In terms of the market breadth, 10 advances and 40 declines. So market breadth right now is clearly in the favor of declines. And if you look at the top gainers and the top losers for Nifty 50 index, just to assess the market breadth out there and the stocks which are actually making it to the list, Adani Enterprises, Reliance, like we pointed out right at the start of the conversation. Remember, it's a bargain buy. That's a report coming in from CLSA. Britannia is another one in that case. And also let's look at Bharti Airtel. That has been ringing quite loud for the last couple of sessions. HCL Technologies and Nestle India. These are some of the top gainers that we have in today's trade. In terms of other gainers that we have in our list, something like an Axis Bank, Divi's Lab, and UPL also have made it to the list. In terms of the top losers that we have, Power Grid, ITC, and Tech Mahindra. That's one which is actually down and out. Cipla, Sun Pharma, and BPCL. These are some of the other names. So IT along with pharma isn't doing quite well. Infosys, M&M, and JSW Steel, they're also down and out in trade with losses of close to 0.1% or for that matter in the range of 0.5%. So narrow losses coming in on that one, but we are seeing some amount of losses specifically stemming out of Nifty IT overall index. We saw some of the names out there, something in the likes of Tech Mahindra, something in the like of Infosys. But Nirav, quickly comment on this one. What do you make out of the IT counters right now? IT versus bank, where do you see the traction, at least when it comes to the charts?
See, I believe banking should do well. IT sector, a lot of shorts have been built in, especially Infosys, Tech Mahindra, and TCS. So they should probably, underplay this one. They can, come down by another 3 to 5% from current levels. While banking, I believe, they've already come down. So it's a good chance for a short covering rally here. Lot of shorts have been built in as well. So, I definitely go with banking on the long side from current levels.
All right, I'm also going to be addressing in some of the stocks and news because we've just spoken about Reliance per se, and also there's a report on Jeffries. Jeffries has come up with a report on banks. It said that the Indian financials have also borne in rub-off effect of global dislocations. Banks are better placed, at least the Indian banks are better placed, with higher retail deposit and limited asset liability management gap and mark-to-market losses. Banks are better placed with limited dependence on even the AT1 bonds, while equities and global bonds have seen the pressure of late. Local bond market is still stable, which is something which provides the required amount of comfort for the Indian banking system. And it also says that the post-correction valuation of some banks are now near or below COVID lows. So that's something that is really interesting out there. Of course, JP Morgan has also given a call coming in on the OMCs, and it said that it's a tactical trade coming in unless there is a financial recession which takes Brent below $60 per barrel. It's overweight right now on HPCL and IOCs, while all three OMCs right now are PAT positive. They have reported PAT should surge further in the next quarter and the Q1 FY24 as the underlying GRMs right now remain steady. This is what it has to say, at least when it comes to the OMCs per se. Lupin also, there is an alliance partner that's received in the US FDA approval for one of the injection, which is a generic version of Zimron bromidine, which is also the injection which is used in the USA, which has an annual sales of around approximately $53 million. So positive traction building in on that one. But Nirav, with that, we're just going to quickly leave it at that, with the trading strategies and the calls that you've made thus far. And thank you so much for taking out the time and speaking to us this morning. All right, it's that part of the time where we address the fundamental side of the story. We're going to be talking in with Divam Sharma, who's going to be Divam Sharma, beg your pardon, who's the co-founder of Green Portfolio. Good morning there.
Hi, good morning.
All right, I'm going to start off of what you're making out of the entire OMC pack out there. You see the unloved sector thus far. Do you think probably some traction in building in terms of the margin profile of these players?
In terms of margin profile, yes, but see, what I am looking at is the crude prices and the fundamentals in terms of the demand. So we feel that the demand is going to take cue from the global developments that are happening right now, and that is going to have an impact overall. As we see interest rates reversing, and as we see again changes in fundamentals globally, we should see these companies again come into limelight. For now, it's a wait and watch for the sector as for us.
All right. Also, Mr. Sharma, what do you make out of the entire IT basket right now? We've seen a downgrade coming in, a couple of downgrades from BofA Securities when it comes to the large cap names out there. I'm sure you've also been in sync with the news when it comes to the top level hierarchy changes that have taken place in Tech Mahindra, or for that matter, Infosys and even TCS. There have been a couple of stories around that. How do you make out, how do you look at this space right now? And how are the valuations stacking up for you? Please go ahead.
See, valuations are really going comfortable for us. But still, we feel that it is going to take some more time for the IT sector to come out of the woods. If you look at the margins, they are still comfortable. There have been, like if in the last few results, if you look at them, there has been some good positive surprises in terms of the results. But if you look at the order outlook, especially with the fallout of these banks and like tensions and a higher probability of a recession in the United States, you would have doubts on the order inflow that is going to come in for these players. But having said that, there is a good reallocation of capital that is happening from banks to sectors like IT. And we believe that IT will lead the rally as it comes, but it should be, again, 3 to 6 months more of a subdued performance from the sector before it starts to go up.
Sure. Also, let's chat about the banking system overall, because Jeffries has come out with a report on the banking sector. We've seen that rescue deal coming in for the Credit Suisse, but of course, the fears and the concerns now remain that there will be more mid-sized bank which will be probably reporting in ALM mismatches per se. That's typically not the situation with Indian banking system, right? The retail deposit remains okay. The ALM mismatch isn't a problem. Where do you see a cause of worry for Indian banking system, if at all?
See, Indian banking system, there was a concern in the that has been ongoing is the deposits. The banks are not being able to attract the deposit. The credit offtake has been robust and it continues to be robust as of now. The margins have been very robust, but going forward, the margins have to fall a bit. If you look at the reversal in the interest rate cycle or the interest rate cycle stopping from here on, we would see that the margins should fall from here. Obviously, the fundraise or the investments into coming into fixed deposits is a concern. So that is there. But what problem in terms of market, I would say, is that the banks are going through a re-rating process. If you look at US, if you look at European banks, we have seen good haircuts for banking shareholders. And especially the foreign institutions are going to take a look at it and say that, hey, any day, like if there is a stress in the banking, my equity is going to be cut down by, say, 50% or even 100%. So that is the bigger challenge. I feel that the sector is going to go through a re-rating in the coming period and is going to have an impact on the FII flows into the sector, into India, as well as the valuation, the P multiples that this sector commands.
Within the space, what do you like? Any names out there?
Like names in terms of?
The banking system, what do you like in that space? Would you prefer something?
Yeah, we like the bigger names. We like Kotak, we like ICICI, we like Axis. In the smaller names, we like CSB Bank. That's there in the portfolio as a disclaimer. So as a fund, we are slightly averse to the sector. We are more inclined towards the sectors that are going to grow from here over the coming years. I would say that in particular, they are the traditional PLI sectors which we are focusing on. And that's where sectors like pharma, chemicals, capital goods, infra, I think that's where the thrust is and that's where the valuations are really comfortable. And that's what will attract capital in the coming times.
Sure. Mr. Sharma, also let's chat about city gas distributor companies, because today there is a note which has come in, a CLSA note which is suggested they have upgraded the rating coming in for a couple of names out there. They expect the expert committee which has suggested the formula for pricing legacy domestic gas, which is to be implemented from 1st April. They're saying that right now it looks a little attractive and they've raised the EPS estimate coming in for IGL. What do you make out of this space? Does it look attractive to you as well?
See, it definitely looks attractive at these valuations. It's it's going to turn around from here as our economy is very strong, especially if you look at domestic economy. The consumption, which was a worry like 6 months down the line when these stocks fell, that has turned around, and we have seen a good demand uptick as well, like from there. So and obviously the prices have also corrected over the last few days. So that looks very attractive in terms of a sector. So I feel that overall this sector is going to perform very well going forward, as we see the change in policy stance from the Fed.
Sure, Mr. Sharma, also let's chat about, apart from city gas distributors, let's also chat about, the other spaces for that matter. Even we've spoken about OMCs, we've spoken about city gas distributors, IT, and for that matter, even banking. At this point of time, something like a Reliance Industries, because it's seen significant amount of, correction coming in on that one. There are bargain calls now being made. Do you think the valuations look attractive at this point of time?
Oh, definitely. We believe that the next set of rally that is going to come in is going to be led by Reliance. Overall, we believe that with the Russian oil that Reliance is importing, their performance this quarter is going to be very robust. Plus, they have been obviously there have been news around the stock splitting into different companies, and that is going to do a very good value unlocking for the company. Reliance has been a drag more than the Nifty. If you look at even today, there was news that Reliance versus Nifty, Reliance has been a bigger drag. So we feel that when the rally comes, Reliance will lead the pack and will be leading the Nifty in terms of the recovery.
All right, Mr. Sharma, we'll leave it at that. Thank you so much for taking out the time and speaking to us this morning, please.
Thank you.
All right, with this, it's a wrap and goodbye from the entire team who puts this piece together. Thank you so much for watching. Please do post your feedback for us in the comment section below. Follow us on link at the bottom of your screen, and for the rest of the updates, stay tuned into moneycontrol.com and Moneycontrol app.